Perfect. Gym owners, to really maximize this webinar, if you have any questions, please start putting them in the chat. I'll ask John throughout the questions that I have. I've got some questions for him, and or at the very end of it, I'll allow everybody to unmute and verbally ask those questions. But for anybody that's on that doesn't know, I'm Josh from FitHive. And this is John from Insight Tax and author of Profit First. Welcome to the webinar, John.
Thanks for having me, Josh.
Awesome. Tell us a little bit about your background, insight, and what made you decide to write a book.
Yeah, well, let's just first start off with the obvious. I'm a sugar addict. I love eating sugar. And because of that, fitness and health have to be a key component of my life, because without it, I would just give in to my cravings. I own Insight Tax. We have 26 team members. We're physically located in Salt Lake City, Utah, but we work with clients all throughout the world. And our niche focus is gym owners, boutique studios, fitness studios, microgyms. We found a passion for helping them because really it's the additional benefit that we get by helping gym owners stay in business is that more people in the world have better health. We actually, if you really think about it and you think about what you offer as a gym owner, you are the heroes of humanity because of what you give to the world in your service. And I think the world will be a so much better place if more people are healthy. Parents are going to have better relationships with their kids. The corruption that exists with the FDA and pharmaceutical companies would go away because people wouldn't need any of that crap. And so there's a lot of upside by having gym owners stay in business. And it turned out that we really enjoy working with them. They actually follow what we ask them to do. And so that's been a real pleasure for us. And then of course there's Profit First for microgyms. We felt the need. The original book was written by Mike Michalowicz, and it's great, but it's very general. And when we implemented Profit First with all of our clients for a couple of years, every single time we were tweaking the system. And so I spoke to Mike about it, and he's like, yeah, it makes sense. Let's have you write a book that specifically addresses how the system works for gym owners. And so we did that. It was published last year, and it's been a good ride since.
I absolutely love the book, and that's obviously what spurred this on. And I'll ask you some questions about it. So everybody else, if you haven't read the book, highly recommend buying it. I'll post a link to it so you can get it. And just a personal thought, I used to own 4 CrossFit gyms, and if I would have read this book, 2 years, 3 years ago, and started implementing what's the processes in here, it would have taken a ton of stress off. Now, as we get into this and start asking questions, what exactly is the Profit First method?
I think let me start by describing the main problem that it solves. So previously I was a controller for a door-to-door sales company, or summer sales as some people refer to it. And I'm sitting in my office, and the president of the company comes running in, and he's like, John, you better lock the doors and not let anyone know that you're here. So a controller is really just the head accountant, if any of you aren't familiar with that. So it's kind of a typical boring job. And so I kind of feel like the president's being a bit dramatic. I'm like, what's going on? Because we had just finished a record year of almost $30 million in revenue. Wow. And the night before, we had an end of year celebration where we handed out these bonus checks to all of our sales reps. And we're talking like $10,000, $20,000, $30,000 checks for these guys. And he's like, all those checks that we wrote, they're bouncing because the owner didn't get the loan he'd been working on. And so all these sales reps are going to show up at your office today. And if you give them another check, all those checks are going to bounce too. So, you got to hide. And I'm like, how does this happen? Well, it happened because 6 months earlier, I'm sitting in this executive meeting with them. And I'm like, guys, there's this really new, fresh, innovative idea sweeping the business community. And I think if we implement that idea here, it's going to make a huge difference. It's called a budget.
Hang on here. You accidentally got muted there,
Sorry,
John.
yeah.
There we go.
You got muted. Anyway, so they're like, John, we don't need a budget. We'll just sell more. I'm like, okay, but I put together this really sexy spreadsheet. I mean, it was sexy. And I laid out for them and I showed them every sale that we did as a company, we kept $8. That's $8. This is a $30 million company and they're keeping $8 of profit from every sale. And they think we're just going to sell more.
It's a lot of selling to work your way out of that.
Yeah. And so like when he came into me freaking out about the checks bouncing and the owner not getting the loan, I'm like, it's kind of like this I told you so moment, but it was not very satisfying because I was going to be out of a job along with all the other employees of the company. And so the question then that I would pose that you maybe should be thinking is, how does a company that does $30 million in revenue declare bankruptcy?
Right.
Parkinson's law, which is what we're getting to with the profit first system. So Parkinson's law states that the demand for something will continue to expand to match the supply. The demand for something expands to match the supply. Most businesses operate with one bank account. And the way we think about that bank account is it's one pile of supply, which means the demand to use that supply is going to continue to increase until the supply is gone, which is what happened with this company. Whatever money was in the bank account, they spent it. And that's what happens with most businesses. With one bank account, we look at that and we say, oh, I have $10,000 in the bank. I'm going to spend $9,900 of it.
Right.
I mean, that's eventually what happens. So Parkinson's law is a big problem. And with Profit First, what we try to do with the system is we say, let's create a false reality, but it helps us that we have less money to spend than we actually do. And the way we do that is we just set up other bank accounts. Because the reality is, if you have 10 grand in your business account, some of that's already committed to other people. You have coaches you need to get paid. You have a landlord that needs to be paid. You need to be paid and you need to commit to paying yourself. If you live in the US, unfortunately, we have to pay something to the IRS. So there's all these things that happen. So we just say, let's set up some accounts for those things. And on a regular basis, we're going to set money aside into those other accounts. Now I'll have money left over in my operating expense account. And now I can make decisions on that dollar amount, not the full 10,000, maybe it's $4,000. And I can make the decisions on the $4,000. So that's kind of the gist of the Profit First system. I'll tell you the 7 accounts that we recommend for Microgyms. We call them the essential 7. So we think you should have an account for income, team members, owner's pay, profit, tax, operating expenses, and equipment. We think if you have those 7 accounts, you are putting boundaries around your cash so that this Parkinson's law problem doesn't end up killing the profitability of your company.
Nice. Now, with your experience with implementing the Profit First method with gym owners, what kind of results do they typically see, or what's the benefit of doing so?
Well, honestly, they all who follow the system have more profit. It's kind of like, I don't know if you guys remember that movie, and I can't even remember the number, if it was Apollo 11 or Apollo 13, but it's one of the Apollo missions. It's the movie with Tom Hanks. They're supposed to land on the moon, but one of their air scrubbers blows up while they're in orbit. And so now the mission becomes, how do they get them home alive? Because they're going to run out of air. Well, I mean, the movie does a really good job dramatizing this principle. Um, Usually, when NASA comes up with something, it takes them 3 months to like, okay, how do we get another air scrubber? It would take them 3 months with the normal protocols and testing that they have to do. Well, these astronauts don't have 3 months; they're going to die. So they came in, and there's a scene in the movie where the guy comes in and just dumps a bunch of parts onto the table and says, "Okay, go. You, this is the equipment they have to work with. We have to figure out a way to scrub their air, to get like a CO2 scrubber." And the real history of it is it took them 3 hours to come up with a solution. So they had limited time. Instead of being able to take 3 months, their resource was actually limited and they had to get it done. As human beings, we have this ability to be creative, even if you're not a creative person, because I'm not. But if with limited resources, we figure out a way to make it work. And so what we're doing with Profit First, the reason it works is because we're limiting the money that the owner should be thinking about that they have available to spend in their operating expense account. They will figure out a way to make it work. And in our case with our clients, they always do. The ones who actually follow the system, they always make it work. And for us, what I'm really proud about, especially during this year of COVID, all of our clients who had been running the Profit First system prior to the March, April shutdown, they're all still in business. Yeah, some of them have had to dip into the nest egg that they generated from running the system, but they're still in business. They're through it. Most states at least have most gyms are able to be open to some level so they can earn money again. And to me, that's the biggest victory of why the system works, because in any crisis, it helps the owner get through that crisis, let alone the benefits of additional wealth to the owner and making them like actually feel like they're earning something for all the hard work they put in.
So if I understand that correctly, and this is when I was reading the book, the concept that I had to wrap my brain around, you're essentially saying people that the owners that implement this Profit First system, they don't necessarily have to increase revenue. They just need to look at their money and have the proper mindset and put the systems in place to understand and basically keep that revenue or keep that profit.
Exactly. I get it. Sometimes when a gym's failing, the easiest solution is to think about sales. Let's get more sales. For many gyms, they don't actually need more sales. They can become profitable with the existing number of members they have. Now, I'm not saying that's not an actual outcome. There are definitely gyms that need more sales, even implementing the Profit First system. I bought into a failing gym a couple years ago. Our gym definitely needs more sales, you know, like, but for the majority of gyms, the profit's already just sitting there. But because, again, they're just looking at the one pile of supply of cash, they end up spending it on other stuff before they get to the point of needing it for the things that will come down the road. And so Profit First just allows us to be proactive about some of those things and separate it in a nice, simple way so that the gym owner doesn't feel like they've added too much crazy complexion to their life. But man, it works. It works. It's a good system.
I'll give you a personal example of that when you said that, because I read the book, implemented it directly. I've got a boot camp program that I'm currently running, and I set up all the accounts, split the money that I had into those accounts evenly, the way the book has described. And I went to purchase. I needed to purchase some additional TVs, and I went to look at it, and I looked at my operating account, and I was like, oh, there's no money in there. Like, I need to wait. And then I went and checked the equipment account, and I was like, oh, okay, we can use the equipment account, moved it over, made the purchase. And I was a lot less stressed doing it that way and looking at it that way, because I still had the money for the team, the profit, all the other accounts were good. I didn't stress out about having to spend that $1,000 on it, where I can think back when I had 4 locations and it was one operating account for all 4 locations. And I mean, there'd be hundreds of thousands of dollars a month, and then hundreds of thousands of dollars would immediately be gone, and then it'd just do this, and it was nothing but stress. And I remember times where something would break, a rower or something like that, and it'd be the first of the month, all the money was there, I'd go out and purchase it, and then on the 10th when I go to do payroll, I'm like, I should have waited. And now it's like, well, now I'm not going to pay myself for about 5 days until the next draft comes in, because I need to make payroll first. And, you know, just looking at it, I'm obviously, in terms of revenue every month, is a lot less than the 4 locations. However, it's a lot less stressful, and I almost feel like I have more buying power than I did previous. And it really is because of the method.
And what you said there too, though, about like, I need to wait 5 days before I can pay myself. I mean, that's the go-to default for gym owners. They just delay paying themselves. And sometimes that 5 days becomes 10, becomes a month, becomes 2 months. And now basically the only pay they're getting is a couple business expenses that they can write off. That will eventually lead to burnout, and burnout results in less people being served. And less people being served means less health in the world. And like, it's just no good. Like we need gym owners to stop falling on the sword. I want gym owners to realize they're the most important person in their business. They need to be paid. And the Profit First system has a specific account called Owners Pay, so that they focus on paying themselves for the work they're doing for their business. That way, they don't have to get to that scenario that you described that many gym owners have experienced, because that eventually is just detrimental to their ability to stay in business.
So, you know, as we go through this, and I recognize some of the names that are on the webinar, what kind of advice would you give somebody, you know, after 2020, which was not a very good year for anybody, right? What advice would you give them coming into 2021 on how to implement it or take advantage of the system? Or, you know, some of the gym owners that I know and I talk to on a weekly basis, 2020, you know, some are 50, 60, 70% loss in terms of their client base and the revenue. And then we're going to sit here and tell them, hey, you need to put profit into a profit account first before you worry about this other stuff. What do you tell us? What do you tell them? Like, where do they start?
Yeah, totally. I get that. That's a common response we'll get sometimes, like, hey, dude, maybe you're not aware of reality, but I don't have any money left over now. So if I take more money out of my account, I'm already at zero. So if I take money out of the account for these other things, I'll have less than zero. And I'm pretty sure my bank's not going to let me do that. Well, I mean, it is a plug for my book. I think I describe a whole bunch of stuff in the book. It's a $20 investment. And some of the stuff that we talk about will relate to this answer, because obviously it's a full, like, we can't cover the entire concepts of the book on this webinar. It's also on Audible, so people can listen to it as well. I still recommend setting up the system, even if they're feeling like I have nothing right now and revenue is down. It's important to get set up immediately. Now, you may tweak some of the numbers in what we suggest in the book, like your profit account. Maybe you're putting aside 1% only of your revenue, but you at least have the habit, you're using the account. We want them thinking about paying themselves. Especially with revenue going down, it's going to be easy for them to say, I'm just going to grind through this, not pay myself. And, you know, maybe I'll pay my coaches, or maybe they have to fire all of the coaches. They're still not paying themselves. But part of the Profit First system too is we recommend once a week at most, or twice a month, that they're sitting down and they're taking the money that we say put in the income account, which is all your customer deposits, and then you allocate it to the different accounts. As part of that day, the system suggests you then look at the transactions that happened in the previous week, or if you're doing it twice a month, in the previous 2 weeks. And you're just looking at those transactions. That's it. You don't have to look at all 12 months. That's a big elephant to eat. We're just going to take a bite size out of it. what happened in those last 2 weeks or that last week? Let's look at the transactions. And there's an entire chapter on how to analyze expenses. Like, was this expense productive for my business or was it not productive? And what I've seen is the gyms that have been able to get through this, regardless of the loss of revenue or client base, they then went back and said, okay, that was a nice to have expense that I could afford when I had the revenue pre-COVID. I don't have that revenue anymore. It's a nice to have, but not a need to have. And so they cut back on some of those expenses because that is just, it's going to happen. But starting the system now and getting in the mindset of I deserve to pay myself and I need to set aside some money for profit because I deserve to be rewarded for owning the business, even if it's 1%. And I'm telling you, 1% is not a big number. You guys can afford that. You can afford to set it aside. And then they'll see the system works. Like it really does. And then as they follow it, they analyze their expenses. They're going to identify expenses that don't make sense right now. It's not actually adding anything to their business. They just maybe been too busy to give themselves the time to think about it. But I think if they do that and they take the 15 minutes on these, we call them allocation days. If they take the time on that day, they're gonna see a lot of good additional decisions they can make for the profitability of their business.
Nice. And you know, listening to you talk, listen to how passionate you are with gym owners. I've done several interviews with business coaches and everything else, and the resounding theme, and with the book and with talking to your team, is it correct to say that it's almost equal parts, or even maybe even more on the mindset of money, opposed to, you know, the system and the mindset have to come together? Because QuickBooks, for example, it gives you the system and there's 1,000 different things that it can do, but that still didn't help me take stress off. I know that. But could you say that Profit First in your company works just as much on the mindset of the money as the system itself?
Yeah, absolutely. So one of the things, I'm not a career author. I wrote a book because we have a system that I think gym owners need to hear about and read it and learn it. But I did pay for a course and I went through this training with this lady who actually co-authors all the books with Mike Michalowicz. So like she wrote Profit First effectively as well, along with his other books. And she taught me, what is your core message? Like you have to have a core message and then everything you write needs to be on that. So it better be an important one. My core message of the book isn't you can become profitable. It's actually you deserve to be profitable, which is a different, because deserving is a mindset. And we've been talking about it a little bit. I'm sure many on the call can have experiences of their own life so they can recall, or another fellow gym owner they know where it's like, man, that guy is really sacrificing a lot. Like sacrifice is fine, but in order to be a viable business, you have to have profit. You deserve to have that. And what we found is that because of the charitable component of the services that gym owners provide, it's easy for them to say like, I mean, I'm changing lives. Their lives are like, their health is better, right? And they're going to live longer. They're going to have better experiences with their family now. I don't need to be paid. It's fine. Like I get it. I'll not get paid this one time, but that one time becomes many times. And now all of a sudden, now they're stressed. Now they can't actually focus on serving the member because they're too stressed out about the bills. And also like, so I have like a 45-minute keynote that I'll give in presentations sometimes. 30 minutes of it is actually talking about mindset and this need for them, for gym owners to know and feel that they deserve to be profitable. There's nothing wrong. There's no guilt that should be had because there's money left over after delivering their services. Profit is the necessary fuel for your gym's healthy survival, period. Without profit, the business will eventually close.
Yep. And then all those people that they've been trying to take care of won't have the service that they deserve as well.
Yeah.
Guys, if you have questions very specific, I'm going to ask John a couple of questions here, kind of specific to 2020. and going forward, please put them in the chat so I can ask him those specific questions. And he actually already answered one at the beginning here. What do you think about the deadline? What do you think is going to happen?
Well, I mean, right now, officially, it's March 15th for business filings. It's April 15th for personal returns. And both of those can be extended 6 months. I've heard rumors that they potentially are going to extend it like they did last year. I don't know. I know some people are actually already getting a vaccine, and I'm not expert enough to talk about should you or shouldn't you. I just know that the reality is some people are getting a vaccine already. So I don't know if that means the IRS will lay off and not extend the deadline. I mean, I would plan for March 15th and April 15th.
That's what I was going to ask.
All human performance happens to a deadline. And if the IRS gives you 2 more additional months, people are going to take 2 additional months.
That's would that be an example of Parkinson's law?
Yeah.
So on that, because coming out of 2020, obviously there was the PPP, the EIDL, and then there's also a second round of PPP. Can you speak a little bit on, if people got that? Because I don't think the EIDL loans even in repayment yet. How should people handle that or prepare for that? And then, along with that question, if they're looking to get a second round, what does that kind of look like for them?
Yeah. So I'll try to be succinct with these because there's a bit in there. On the EIDL loans, I would just treat it like a normal loan. And at some point in the next year, you'll have to start making payments if you took that on. If you haven't used all your EIDL loan money yet, I would recommend checking out our YouTube channel, youtube.com/insighttax. And I did a video on this last year on a really great way to use the EIDL loan almost for whatever you want, because that loan did come with stipulations on what they want you to use it for. But we don't have enough time to go into that here. On the PPP loans, if you got the first round, look, they changed the rules so much in so many ways. I mean, it'd be crazy if you couldn't get that fully forgiven. In which case, when it comes time to apply for forgiveness, just follow whatever process your bank wants you to do. Most of them basically have taken the SBA forgiveness application and then they put it on their website and it's a portal, really basic questions. And more than likely, if you got that, you also have a payroll service. And I'm not aware of a payroll service that doesn't produce a PPP loan specific report for you to pull. Most of them have tried to make it really easy. So just pull those reports. That'll give you the numbers you need. Follow the bank process. And as a side note, if you don't have a personal banker, I recommend getting a personal banker. It's always better to deal with the one specific person instead of going through the 1-800 hotline or all that stuff. And even if you don't feel like you're a big client, they have positions at the banks. Their sole job is to be a customer representative. And so if you have an account at that bank, they have someone who is paid to basically be that person for you. So don't think if, I don't have $1 million business, that's fine. They'll still give you a personal banker. Really helpful because in these cases, I've been able to go back and forth with my Chase representative, and she's been really helpful because I'm asking her questions based on all the questions that I get from all of our clients. And so that's been really helpful. On the second round stuff, in order to qualify for a second round, you have to be able to show that any one of the previous year's quarters was 25% less in revenue compared to 2019. So if my third quarter of 2020 is 25% less in revenue than my third quarter of 2019, I qualify. Even if my total income is up for the year, which for most gym owners, that's not the case. So I'd be shocked if gym owners can't figure out a way to qualify for a second round, in which case I would definitely apply. And you're going to follow the same process. It looks like if your loan is less than $150,000, they aren't even going to ask for that much more information. It sounds like it's going to be a very fast process for PPP loans less than 150 grand.
Which probably, I would guess that majority of gym
Majority of
owners
our
are probably
gym clients are under that threshold.
nice. So we got a question from South Shore, and I'm going to venture to guess we probably have some follow-up questions on it because it's probably a pretty lengthy answer if you went into everything. But any specific guidance for a C Corp?
Yeah, C Corps are tough. I'm guessing the reason, because normally you wouldn't choose to go a C Corp, probably from like a rollover, like a 401k rollover thing, which is a requirement, or they maybe got a private investor. So usually what I say is add an S corporation to your structure. C Corps pay tax of themselves, they're a taxable entity. And right now it's 21%. With the opposing party now in complete control of the government, it's possible a lot of those favorable tax reform things that happened in 2018 are going to get reversed. Right now, it's still 21%. But that still kind of stinks because if you have profit in the C Corp, you pay tax on it 21%, but then you pull it out as the owner, you have to pay personal income tax on the money you pull out as well. That's what we call double taxation. And even if you're in a low personal tax bracket, you're already in a 35 to 40% tax bracket pulling your money out of the C Corp. So what I recommend is having an S corporation, which is taxed differently. In fact, the S Corp doesn't pay income tax by itself. And we recommend most gym owners have the S Corp structure. And then you just pay all the profits from your C Corp into the S Corp. So your C Corp will show no income, but your S Corp will have the profit, and then you just pay personal income tax on it. You avoided double taxation. As far as running profit first, I would run it the exact same way with that in mind, because there is a thing for income tax. And again, I would just plan on, I'm paying that income tax because I'm going to flow it through my S Corp.
So with an S Corp, can you take an owner's draw from an S Corp, or do you have to take a W-2 from that?
You have to take both. The IRS code requires you to pay yourself a reasonable salary, but they don't define for us what the word reasonable means. And so we typically take a very small W-2 amount that we know is going to fly, like it's going to be acceptable for compliance. Yep. And then the rest is a distribution.
I had no idea. I thought it was once you did an S Corp, you had to go W-2, but that
yeah, you do,
sense.
just not 100%.
Right. I thought that was the only thing you could take. I'm assuming that's Leon with South Shore Fitness about the C Corp. If you have any specific or follow-up questions on that, because I know it's a pretty general answer, feel free to put in the chat or unmute. So I got one from Rob. And Rob, for some reason, I feel like either you're not the only one in this situation, or I've seen you ask that question in one of the many groups that I'm in. So he bought the gym in 2020, and I'm going to assume is in the position that he needed the PPP or the EIDL, and he wasn't able to get it because of the tax returns. Any recommendations or advice for him?
Yeah, from my understanding, this new round of funding that most of us are thinking of, can we take a second PPP draw? You would qualify to take a first PPP loan at this point. So I would reach out to your bank and see what the application looks like, and and I would ask for that first round, because you have been in business during a year of COVID. And you think you should qualify for this new round.
Nice. It just he wouldn't have the same required the same qualifications as the
it's going to be basically the same requirements that we all had the first time, like which is are you under 300 employees? Basically, I mean, there weren't very many requirements to get that money.
Nice, cool. Rob, do you think that'll help, or were you trying to get the EIDL? From the sounds of it, oh, yep, that was
I don't know. I didn't see any updates to the EIDL, so you might. you might not be able to get an EIDL, but I'm sure there's some SBA loans that also have favorable interest rates you could look into.
That's what I was going to ask. I wonder if they look more favorably on that.
And not really a workaround for the returns other than fraud, which I don't typically recommend. Yeah, so I don't think there's a workaround. Sorry.
Rob, if you don't mind me asking, did you just purchase the name and the assets, or did you purchase the actual tax ID and everything of the business? I don't know if that makes a difference on the tax returns.
It would make a difference, because if I buy the equity of the business, I use the existing EIN, and so that there would be a tax return. Yeah, just the assets, not the LLC, basically. Yeah. I mean, honestly, Rob,
go ahead.
What I would maybe try, maybe this is a workaround, see if they'll take the 2019 return of the previous owner.
Does the previous owner currently use that LLC for anything? Not sure what XPO means. Rob, feel free to unmute. I don't know. I think I'm allowing that.
Okay, can you hear me?
Yeah.
Yeah, so I bought the franchise. It's a Pure Barre franchise. I bought it from Exponential, which is the parent company.
Yeah, so they wouldn't have a separate return for that.
Yeah, so I don't think they're going to have one.
Yeah. Sorry.
I know it sucks. I'm buying 4 more, but this time I'm doing it the right way. I'm getting the LLC as part of it. So.
Yeah.
Yeah.
So his probably best thing right now is to just go after essentially the first round of the PPP and see if you can qualify for that.
I would definitely apply for sure.
Yeah. Okay. I'm going to do that.
Because what's the typical PPP loan amount that a lot of people are getting? I don't even know how that was calculated.
It's 2.5 times your average payroll. So you take your payroll over 2020 divided by 12, or if you're all in business for 9 months, you divide it by 9 months, and then 2.5 times that.
Okay.
Not a ton, but it'd be something, right?
Yeah. Anything would help.
Right.
I mean, typical Pure Barres got about $60,000-$70,000 from that EIDL program. So and that's kind of bummed I missed out on that.
Yeah.
Just a random follow-up question. What made you decide to, well, I guess that was right before everything really got shut down. It was like a perfect storm, huh?
I took it over March 1st. It was at break even from corporate, and I got a smoking deal on it and literally had to close the door 17 days later. Just couldn't have predicted it.
Yeah.
Right.
Yeah.
I not to take away from it, but I feel like I bought my first home at the peak of the housing market right before the bubble.
Yeah.
And it popped, and I had to sell it for 57% less than I owed on it to get out from underneath of it. It was terrible, but yeah. Well, I would recommend though, if you need any help, reach out to John and his team and see if they can help you navigate anything or look at anything or try to help you with that for sure.
Thank you. I appreciate it.
Guys, any other questions on the call? Anybody else on the chat? If you want to unmute, you can do that. Ask John while we have him. John, while they're thinking through it and seeing if anybody types anything out there, if they want to reach out to you or your team, where would people go?
So we have the website for the book, profitfirstformicrogyms.com. Or you can go to our website, insighttax.com, and we have a contact us form. We also have a ton of blog posts and resources that are free. So feel free to utilize any of that stuff. And our web address, Insights Tax, is actually the incite, like to incite a riot, because I think the government sucks at spending our money. And that's how I feel about them. So it's INCITETAX.com.
Nice. Awesome. Not seeing any other questions. John, thanks again for hopping on and chatting. I've got this recorded, everybody. We'll get this uploaded to YouTube so you can rewatch it. I'll also put in the links that John recommended there. And good luck, everybody, in 2021, and good luck on tax season.
Thanks, guys. Appreciate it.
Yep.
Awesome. Thanks again, John.
Yep. See you guys.